Right, Taimur Baig is Managing Director and Chief Economist at DBS Group Research. He's joining us now. Taimur, good morning. Good to have you with us here. Thanks very much. I'll try and sort of get you to answer something local related, which is, of course, the central bank here, RBI, transferring that record amount to the government for FY24. It does open up a little bit of extra fiscal space, and that's always welcome, isn't it, Taimur? How would you look at it?
Yes, but I also would point out that there is a likely miss on the disinvestment side. So this would be a good buffer to balance it out as opposed to being a source of additional fiscal expansion. So to me, it's the fiscal surprise would be positive only when we realize how the dividend would be treated. Would it be treated as a recurring amount that can be matched against ongoing expenditure, or would it be treated as a bit of a one-off bonus surprise, which can be used for some degree of consolidation?
But this is mostly relevant for the next budget, right? F5, when the new government presents that in July. That's when we will know.
Right. So the immediate impact with respect to market liquidity is, of course, nothing. This is going to come with a lag. And the amount that is done, I mean, look, you can think of the budget both in terms of cash accounting as well as accrual accounting. So it doesn't really matter whether it falls under the 24-25 budget or the 23-24 budget. What matters is the overall fiscal deficit and the overall fiscal debt. Will that be addressed through the bonanza, or would it be accommodated through the bonanza?
So, Taimur, just a couple of questions. What is the extra fiscal space that you see the government having right now? And is there a possibility that this could reduce the overall government borrowing as well if the other revenue collection is in line with estimates?
I think from a debt issuance perspective, this certainly reduces some of the pressure. If we were going to have shortfalls in other sources of revenue, this certainly acts as a balancing factor. So therefore, it's a piece of good news as far as the fixed income market is concerned when we are looking at from the supply of bond perspective. I don't necessarily think this is going to immediately cause a recalculation on the government's part in terms of borrowing calendar and issuance, because there are substantial outlays planned in terms of expenditure. The question is, do you, to my earlier point, do you accommodate those expenditures because of the bonanza, or do you overall take a sanguine look at the fiscal outlook and say that on the disinvestment side there might be some undershoot, and therefore this should be seen as a balancing item?
Hi, Taimur. Good morning. Good to see you. So the government uses this dividend maybe to take care of its borrowing needs. It could have an impact on the bond yields here, right? How do you see the money market instruments pan out, both the yields as well as the rupee?
Right. So I think both the yield and the rupee are equally a function of domestic factors and international factors. And the international factors, of course, are dominance of US dollar and the flattening of yield curve that we're seeing with the short term going up, especially in light of the overnight Fed minutes. So from a domestic factor perspective, I think this is supportive of yield. It doesn't necessarily hurt it. But on an international basis, there are a whole bunch of other headwinds in place. So net, I'm not necessarily looking at an additional buy signal for Indian bonds just because of the bonanza.
Okay, no additional buy signal. Just coming back to that extra fiscal space that the government would have now, right? So the government would have to decide between either increasing their spending or reducing their fiscal deficit while they present the final budget in July. What is your best guess?
Well, there is what one would like to see and what would actually see, right? So from what I'd like to see, as a former, I'm a fiscal economist, of course, I would like this surprise addition from the dividend to be used as a saving tool as opposed to accommodating expenditure. I think that this is going into the post-election phase, so I don't think there's going to be that much demand to announce additional expenditure just because this has come in. So I would like to think that what I would like to see and what would actually happen are more or less the same thing, which is that the government would use it as a balancing item for some of the other revenue expenditures which might be coming under the budgeted amount.
Taimur, any other sort of top of mind issues which you think are important as we sort of head into the next couple of months? We have the election result, of course, and I'm sure when you talk to clients, etc., that comes up as it's a talking point, it's a conversation point. But of course, no one really knows how what comes off it. We'll know on the 4th of June. But really, I mean, in your conversations with foreign clients, etc., who've been big sellers, by the way, here in India, I'm talking about the stock market. What are some of the things that you're hearing?
I would not necessarily take some monthly selling by FIIs as a sign of nervousness about the election. I think that's a global development right now. All emerging market stocks have seen outflows China might be only one exception, but that's been beaten down so much, there might be some value there. Virtually most stock markets around the world look very expensive. Only the US has a big secular driver, the whole AI story, that is perhaps justifying some of the upside. Elsewhere, I think given where interest rates are, given where interest rates would remain for a prolonged period of time, I think it's a tough slog for stock market. So I wouldn't necessarily look at FII selling of Nifty or Sensex as a major source of uncertainty about domestic factor. It's a global development in my view. As far as election-related developments are concerned, I don't think it matters that much. I don't think anybody is talking about a huge upset. It's about the margin of majority and the likelihood of the coalition strength and so on. I don't think it's that big a deal.
Some economists believe that some more steps could be taken by the RBI, whether it's in the form of a near-term GSEC auction cancellation or a reduction. These incremental steps cannot be ruled out. Are you factoring that in as well?
Well, I think that given the global factors, which is pushing up yields around the world, anything that the RBI can do in terms of impressing the market with respect to the supply of bonds out there, or its own confidence about dealing with inflation and liquidity, I think is a positive sign and will be seen constructively by the market. Look, the big pull from the US makes everybody bearish fixed income. And therefore, you need to do things like fiscal consolidation and improving the supply outlook to balance out the rather difficult external environment. And I think from that perspective, I would expect the RBI to do some good risk management strategy actions going forward.
Okay, Taimur, great speaking with you. Thank you so much for giving us your quick thoughts on the news flow that has come in. It's a positive for the bond market and, of course, a big positive overall as well. The RBI approving the highest ever dividend payout for the government.